Will December be a window to 2026 as far as what to expect from the market?
Yes. 2026 would be slightly tumultuous. You still have to invest. I think the first quarter would be great. The summers will be rough. Once again, if you're holding for 5 years, it does not matter. It does not
Mhm.
matter. 27, we could hit a little iceberg and then have a recession if they allow it to be reported. Trump may just say, fuck it, we ain't reporting no numbers. Who knows?
Sure.
But it's an accumulation period. Put in chat, I'm going to accumulate through the winters. This is when you get to build, like, that generational wealth word gets thrown around a lot, but these are the times when you actually get to build it. That's why I always go back and look at my post from 10 years ago. Like, stay the course of what you're supposed to do. You're going to have some great moments. If you feel like you missed out on Nvidia and Bitcoin and Apple and AMD, you're going to have chances to in the next year and a half to do so. So hold for the long term, 5-year minimum. 10 years is ideally the goal. Enjoy the accumulation season.
Yeah, it's interesting. We were looking at the months, and we like November kind of acted how we typically see September and October
Yep.
at. It's the first time in like 10 years that the NASDAQ was like trading like at a negative, and then I think it kind of creeped up or
Yeah,
at the
creeped
end
up.
of Friday. It might have broke even. But typically November is the month where we see the greatest gain inside of the NASDAQ over the past 50 years, which is interesting. Over the past 10 years, it's been July.
Yeah.
Very interesting. But December, we'll see. So it kind of trades flat. We have seen some great years. 2022 wasn't one of them.
Great accumulation year, though.
Great accumulation here. You're exactly right. We'll see. You know, we've been talking about this Fed rate. Always when you're watching these things, Fed rate, those type of catalyst events are always important. There's going to be a new Fed chair announced at the end of this month, so that we could see a spike as a catalyst event. But that earnings part, right? When we talk about earnings, companies beating earnings, that's been consistent throughout all of 2025.
Yeah.
The major hyperscalers have all reported. You won't hear from them till end of January anyway, early February. And so we'll start to see this pickup. We already saw the spending from the consumer side leading into December. I think it'll be a pretty good month. I always talk about that first 5 days of January. We did that first 5 days, and
it's telling.
Historically, if you see how the first 5 trading days of the year are positive or negative, that usually gives you an indication
of how it's going to go,
how the year is going to be. So yes, December I think will be good. Those first 5 trading days of 2026 is what I'll circle. And for everybody in EYLU, y'all know how this works. I'll put the diagram up so y'all can see the history of it.
And then also the Department of Labor canceled the job report for October. But in addition to that, they also canceled or delayed a few different things. CPI, real earnings, the job openings and labor turnaround survey. To put in full context, this is the first time in American history where a job report was canceled. It's been delayed before. It's never in American history been canceled. So that's not good.
Yeah, but that's why last week we were talking about why did they release the September reports? Just to tell us you're going to cancel October's.
To make up for it. Robbing Peter to pay Paul on paper.
It's never happened before in American history. So yeah, there's turbulence.
But the S&P finished positive for 7 consecutive months.
It did.
Longest streak since 2018. Continue to hold 2 tech, 2 index. No stress. Hold for the long term. You put this in chat. You only need 4 to 6 great stocks to have a massive amount of wealth.
Yeah, and we're like 20 days from having another double-digit positive growth in the NASDAQ, in the S&P, and in the Dow. Those will be the third year? I think if we go over 20, it'll be the third year in a row. Yeah, and we're right there. I think the NASDAQ on Friday was at 19.5%. So we're right on that 20 line. Let's see if we can get. I think we'll get it.
The drought is coming.
Thank you. Let's talk like it's just us. You're getting 20% return per year to offset them 2 years. That's going to be really fucked up. I don't clip that up. Clip that up. They're fronting the money in advance to let you know, hey, 26 and 27 are going to be a little bit rockier.
Back end of 26?
Yep, back end.
Yeah. So what that's one of those things, and I was trying to figure out, like, well, if people are new to the space, like, what are the signs that they should look for that is we're getting to that point, right?
Listen,
I think
when you cancel a job report for the first time in American history.
Well, that's this year.
That's a sign. That's a sign.
That's this year.
Not good.
It's fucked up.
Yeah, that's this year.
Pardon my language.
Yeah.
Pardon my language.
And even that, grow up.
Yeah. I've gotten cursing. I've got a few.
No, I'm saying that's this year, and even with that, the market still went up, right? But this is going to be something different, right? So like volatility is something we could say something like the VIX, right? Like the VIX, when it gets to 30, 35, we're nowhere in danger zone. You know what I'm saying?
Past 30.
Even past 30, we're going to have like what MicroStrategy is going through. Certain companies are going to go through the same thing where it's not a 15% drop in a day, or the most dangerous declines are the ones that are gradual 2 and 3% per day. 1,000 little cuts. Like that's what we went through in 2022.
I was just going to say that.
It was just gradual declines, and there was no market makers to want it because all the asymmetric risks went away. We're entering the same kind of field. But like Rashad said, when you start lying about the numbers, and then not only lie, now you're not reporting the numbers. That's not a good sign. New Fed chair, not a good sign. You say what you want to. It's not a good sign that he's putting in the guy that he wants. Not a good sign. Also, listen to me. I'm gonna come on every week and tell you.
Yeah,
I told you back when we did the Breakfast Club in the year 26. Oh, how did you know, bro? Listen, listen.
Yeah. So those are things, right? Like when we talk about what are some indicators, like those are the things. I think what you touched on that reporting, we've been. It's kind of crazy if we watch the past 2 to 3 years. Let's take 2022 out of it.
Yeah.
Especially like companies like NVIDIA, these hyperscalers, we've been watching them beat quarter after quarter after quarter after quarter. I think one of those telltale signs that we should be mindful of is like when they don't beat. What happens the first time that NVIDIA doesn't beat this quarter?
The rest of the market is going to fall apart. And also look at if OpenAI and Endeavor go public faster, that's definitely a sign. Because you don't want to go public in the middle of the crash.
And they're still talking about it, right? Like now the debt has increased. The debt has increased.
Yep.
Yeah, well they keep raising money.
We'll see.
Yeah.
Question from the audience. They said, should IBIT or could IBIT replace one of the tech stocks into Tech 2 index?
Never.
Or can IBIT fit into Tech 2 index?
Do what you want to do. If it doesn't work out, that's on you. No.
Do what you like.
And here's why. This stock club, I won't give this, but Microsoft and Apple and VOO and VTI is set up to absorb any collapse out of the top 150 reasons why the market could go down. I haven't calculated that. Like, as much as I loved NVIDIA, it would have made me look brilliant 2 years ago to replace it. Don't want the downside risk though, because the maximum drawdown for NVIDIA is 65%. It's not that for Apple. So while the rest of the market, if the market falls 40%, Apple's not going to fall that far. They'll have levers in place to make sure that they don't go down that far. So no. And also when you have a good investing system, you don't change it every 2 years because you think something is cuter. You can do all your cheating and side chick shit like I did on Thanksgiving, but that portfolio stay faithful though.
Your portfolio's faithful?
Gotta stay faithful. That's why we get to talking about, oh, I don't like this. I've been free. Dog, you go cheat in your personal life if you want to, but when it comes to that portfolio, faithful.
Be faithful. Be faithful to your portfolio.
Don't swap nothing out. You got your little roster, red pillars, right? Same order. I'm not changing too much.
Just keep re-upping. Just keep re-up. Treat the portfolio with some damn respect, please.
Please. So, but do what you want to do.
You can.
Another sign too. If we just wrap the show up,
it's over.
Okay.
That might be a sign that the market's going
next one.
Yeah, but you know what? You know what's another sign? And you start the show with it. But like if we start to see like commercial real estate, like that collapse, like we've seen some signs.
Yes.
There are signs. There's a regional banks start to collapse. The thing is, like, those things have all happened at different points, and we just kept going. We watched a regional bank collapse,
and they found a way to,
and we just kept
inject But even 94% of the S&P is not a primary consideration in portfolio allocation. That's a scary sign. Because you got to think, if that's the case, from 2009 through 2019, pretty much because of zero interest rates, that's why the majority of the market went up. And then when that went away, it was like 15 companies that you could really lean on. Like if your life was on the line. That's scary. European stock market, there's not one there, probably with the exception of Spotify. I would have invested in first.
Flip a coin.
Not one.
What's the investing lesson of the year?
The price in which you accumulate the asset matters more than anything. It's not just a technical analysis thing. This is a risk to reward ratio thing. The price that you buy the asset matters, and do whatever you can to get that cost basis down. Because even if, let's say Saylor's right in his assertion about the value of Bitcoin, the banking cartels are showing you in real time, I don't even care if you have the number one asset if we want inclusion into it. There's different levels to the game. Why do you think everyone's going to Dubai? Because there's no asymmetric risk to reward to build it in America first. That's why everyone's going to Saudi. They're telling you, hey, yo, I was going to go to the tech conference in San Fran, but I'm going to Dubai, UAE, and Saudi. Go capital raise. You don't got to listen to me. Follow the money.
That's it. Follow
the money.
Be a disciplined investor.
Mm-hmm.
What's your thoughts on the stock market, and what investments are you looking into?
In terms of next year or this year?
Next year.
Next year, I think we still have a bullish case. I still think we have a bullish case. I think the hype around the AI bubble has been overdrawn a little bit, based on everything that we're seeing. Right, it's the AI bubble, and then Google says, "Hey, where you can be more efficient." Oh, AI bubble is going away. I think the story still will become how we become more efficient on how we're going to power this. I don't think we have a clear solution there. I talked about who I think will lead that. I still, and I had this conversation today, I still see this memory sector as something that will be very bullish in 2026 from the amount of demand versus the amount of supply. In fact, Samsung has decided that, they are limited, which is why we saw Micron rise. But even Google, as a memory partner, they had Samsung as one of their clients. They said that there's talks potentially that they're going to move away from Samsung as their primary DRAM memory component, which is interesting because it goes back to that theory that we've been saying all year long since this administration has been here. We're going to make sure that American companies are great, and we're going to make sure that American companies partner with each other, which is why you saw Apple now talking to Intel, right? All these companies are working together, which tells me that memory, that component, and the American company that leads it is Micron. There's still a huge story to be told there. So I like that going into it. I'm going to do a whole class on it about my picks for 2026 in the next class. And we're going to review our picks for 2025. I still have, TSM, NVIDIA, ASML has performed well as well. We had Vistra, Vertiv, all these companies, they're all double-digit percentages. Some of them have gone up by, 200%. Celestica was in that mix. So the bullish case is still there. I'm still bullish. There are still some opportunities inside of the space. I'm actually going to post something tomorrow about. I gave that analogy between how the body and the human anatomy and AI and the connectivity, how they correlate to each other. I actually used Nano Banana 2 to create the illustration. It came out fire.
That's fire.
I'll post that tomorrow because there's so many components that have to work together to make this work. So I'm still bullish on the market, and I'll be giving away my picks for 26 on Market Mondays before we end the year.
You're gonna post it where, at EY University?
Yeah, I'm gonna put it inside the stat.
So talk about that, what you do in EY University.
Yeah, man. So EY University, obviously we teach an options class, and a lot of people have made tons of money from some of the information, whether they're going long calls like I am, or they're going with the information and taking shorter term calls on it. Inside of that, there's also information that gets passed through the community. So that's why I said the app is so important. So when we're talking about valuations, do you have a tech component? Yeah, we have a tech component. It's our app. It's where our community lives. It's where we communicate with each other. But inside there, we got our investor club as well. So we have amazing teachers inside there that not only listen to the class and review the information and give a deeper dive, but they actually give their own information as well. And I've been using the information, especially when we brought Austin on for our episode when we're talking about Bitcoin and the cryptocurrency space and how he viewed it. We've used that information to apply and add to our portfolios as well. So that's happening on a daily basis. The options classes happen on a monthly basis, and inside there, it's like a 2-hour class where I'm like telling you, right? I say that if this is the public school, the EYL University piece is like the private school, where it's like, here is what we're looking at. Here's why we're looking at it. That's how I kind of look at it. So yeah, we're gonna give out all the stock picks for 2026. And again, review 2025 because we've had an amazing year. In fact, I put my portfolio in the chat box. We go on a call, and they were like, "Your portfolio has beat the S&P by 85%, which is nothing to sneeze at." So kudos to everybody that's been using the information and executing on the information.